My name is Sean Yang. I'm the CEO of Tribe and ENC. Today, we're going to talk about impacts of inflation and the real estate market in today's time. As everything on this podcast relates to Tribe, our social engagement platform where everyone can invest in the capital in themselves and grow as investment. We have Alex here today. Hi, Alex.
A pleasure to be here.
Yeah. So, Alex, would you like to give us a little introduction about yourself?
Well, I'm the managing partner of Modern Capital Partners. We specialize in commercial real estate acquisition and structured finance. Certainly, it's been quite a time in terms of how the markets have been changing quite a bit lately. So I'm excited to jump into the topic.
Thank you. Yeah, so in today's topic, we're going to talk about how inflation has impacted our social norms in 2021. And then we're also going to talk about how inflation has impacted a lot of real estate market and the market in general. We're freely going to talk about a lot of the topics here and then trying to relate to, investment, like what Trive software and the platform is doing. I first wanted to get into this application that is very similar to Trive called Fundrise. Fundrise is a real estate application that where everyday people, it's kind of like Robinhood. I don't know if you guys are familiar with Robinhood or Webull, but it's like kind of like Robinhood or Webull of like for stock investment, but Fundrise is more for real estate, where you can use $10 to invest in a real estate, which is like a crazy concept. But I hear mixed things, and I just wanted to get an expert's opinion about what do you think about Fundrise?
In Fundrise and other platforms like it, CrowdStreet is another one that is comparable in terms of its style of being able to pull together a large chunk of investments. Fundrise is a bit more decentralized. CrowdStreet, they still kind of prefer there's certain high net worth individuals, but it's definitely a interesting concept that opens up another asset class for people to invest in on a regular day-to-day basis. Definitely it comes with pros and cons, because since it is a crowdfunding platform, that doesn't need to be publicly registered. Therefore, it does somewhat limit scope of how the investments can be structured. And not that any individual investors need to worry about that. That's very much a issue for Fundrise. But so to speak, there's a lot of effort and there's a lot of work that goes into actually putting together a crowdfunding platform. So I would say that they are relatively safe because there's a lot of compliance that goes along with it, although you might not necessarily get the same kind of returns as if you were to, say, jump into it yourself or get into a little bit more of a more free-flowing structure, so to speak.
That's what I heard. I heard that a lot of the returns on Fundrise is actually very little and minuscule compared to a lot of the investment options out there. Major thing, the reason I wanted to bring up Fundrise into an inflation and real estate market topic is because, Fundrise is technically a real estate investment, but, like you said, it's more of a crowdfunding rather than direct real estate. But, with the scares of inflation, I heard a report that less people are, getting into, real estate investment, or is it an actual good time to get into real estate? What do you think about that?
I think getting into real estate, it's always a good time to get into real estate as long as they have the right deal. But generally speaking, historically, real estate has always been a hedge against inflation. But on the other matter, I think the important thing is to look at is in terms of what type of inflation is happening. Because I wouldn't say that the kind of inflation that is going on in right now is the traditional Weimar Republic, Zimbabwe kind of inflation that we might think of. It's more case by case basis. I mean, you have a whole areas of the economy where inflation really hasn't happened at all, save for a few products, which is largely in, say, a lot of primary food goods. You have areas where, and that's places where you just didn't have much inflation at all. Yeah, because even if you go up to, say, 4%, that's not immediately something to panic about. There are other countries that have had much more tricky monetary situations, so it's nothing to scream about. It's not great, but it's not going to kill you. And then you have the other kind of inflation that is currently raising prices, and it'll stick around for a while, but it's probably going to go down at some point. Perfect example of this semiconductors, certain portions of heavy machinery. That's probably going to get worse because a lot of that is dependent on global supply chains, and we're probably going to see inflation there for 12 to 24 months until we build out capacity. And the other element is inflation that is really inflation that's going to go up and is not going to come down, which is what we've seen mostly in a lot of assets, particularly in easily financeable single family homes and duplexes.
So what is going on? I mean, first of all, so do you? I mean, so what you're from what I'm hearing is Fundrise is more for people who are beginners, who are. So do you recommend Fundrise and certain people platforms like that? Because we ourselves as Tribe is building an investment platform for people, human capital, but we're talking about real estate capital. So is Fundrise a good opening door to get into in this like hectic times where real estates are like so high, where home prices are like super high?
I definitely think it is a good that Fundrise and platforms like it are a very good product to look into and to consider as part of one's portfolio, because of course diversifying into hard assets is always good, especially in a time where it is believed that inflation is going to go up.
I totally agree. I see that. So is any time is a good timing for real estate. You just gotta just be careful and do
Find
your
the right deal.
due diligence.
Yes.
But do you think COVID had any certain impact on the real estate market currently today? Just like what I was talking about, like the high rises of home buyers and home assets, and what is happening with the market right now with the real estate?
Well, I think that the most permanent effects were predominantly in the realm of, say, those smaller properties, single family homes, and duplexes, because honestly, in the commercial market, yes, there has been some inflation in asset prices overall, but generally speaking, the commercial real estate market is much less affected by inflation overall. Yes, of course, it is impacted, but a lot of those prices are really derived from cash flow. So basically, if inflation hits and you need to raise rents at least down the line, that's when it's going to impact the valuation. It's not going to impact it right away very much. Um, but yes. So in terms of what's going on in the real estate market that people see more day to day on the side of the houses, and I believe I was touching on that a little bit earlier, is that there's a pretty big supply shortage of houses right now, while at the same time millennials are in a large bulk getting into the initial period of time where a lot of people are actually starting to buy homes. So you have
Hmm.
this combination uh, where you haven't really had the sufficient amount of capital investment to simply build out more inventory, but at the same time you have this new large bracket going in and buying houses at a much faster rate than a lot of the previous generation is selling. And since we haven't really built out capacity for that, and prices of material to build out houses have gone up, there's a little bit less, there's just an overall disconnect in supply and demand.
So yeah, I mean, in the realm of investment, I heard real estate is still the king of investment, right?
I
It's
think
like
so.
the most safest and most liquidable. I in a lot of the
I, would,
research.
I wouldn't call it liquid, but I would definitely call it safe, because of course you do have your sale period listing. I'm sure that a lot of people are aware of that process you got to go through.
Yeah, definitely compared to like cryptocurrencies, I think it's a lot safer. But or NFTs. But so main point that I wanted to go with this is, um, the whole, is it does the generational thing have to do with any of this? Like, for example, there are so many I want to call them boomers, the baby boomers that are going to retire soon, and then we have the Gen X's who are like very frugal about their assets and their investments and stuff like that. So is that having any impact of it? Is that the reason why they're having less shortage of houses that's being sold, or what is the generation have to do anything?
Yeah, I would say, yeah, that's one of the key factors in terms of actually on the demand side, because I mentioned the supply side that simply there hasn't been as much building going on as there needs to be to build new houses. But that's on the supply side. This was on the demand side, where you have millennials going into the market and buying houses because the main issue is that more people are entering the housing market than are leaving. So you don't have enough boomers downsizing and selling their homes to really satisfy the demand. And also, there's a bit of a disconnect in various markets where people might want to live in one area versus another. So you can't necessarily just rely on passing down houses. But what you can expect to see is that, and this has already started happening, that as a lot of boomers are moving into retirement this year, I believe it's this year or maybe next year, that baby boomers really start to head into bulk retirement, where they will be exiting the workforce en masse. And in that process, one thing that has become fairly common is to effectively provide gifts or help a lot of their kids buy houses. So all of a sudden, in addition to that supply disconnect, you also have large segments of people either with their own money or because they received some sort of an early inheritance. All of a sudden, you see all those kind of people in the market for their first homes. So that is another major issue there, driving the price up.
Yeah. Okay. Yeah, I totally agree with you on that. Like I said, maybe we can have a financial boomer expert in the future podcast. But so speaking of the generations, 2008 financial crisis,
Mhm.
it was a huge, uh, was it deflation or something like that of the
Deflationary period, yeah.
yeah of economy, and that was a huge impact in the global economy itself, not just the US. So do you think we're entering into something similar like that with our inflation scare, or do you think is there any impact on the real estate market that people should be worried about in terms of being an investor?
Well, in terms of the real estate market, if you're investing in cash flowing properties, at least in the commercial space, it's probably not going to be that drastically affected. In fact, you're probably better off looking at the overall larger macroeconomic picture in terms of, say, how wage inflation is affected, how costs of living are affected. But in terms of people who are looking to invest in smaller properties, I mean, I personally wouldn't bank on the prices going down.
Okay.
I mean, there certainly is going to be fluctuations, but if you're been to really satisfy the demand, and also there's a bit of a disconnect in various markets where people might want to live in one area versus another. So you can't necessarily just rely on passing down houses. But what you can expect to see is that, and this has already started happening, that as a lot of boomers are moving into retirement this year, I believe it's this year or maybe next year, that baby boomers really start to head into bulk retirement, where they will be exiting the workforce en masse. And in that process, one thing that has become fairly common is to effectively provide gifts or help a lot of their kids buy houses. So all of a sudden, in addition to that supply disconnect, you also have large segments of people either with their own money or because they received some sort of an early inheritance. All of a sudden, you see all those kind of people in the market for their first homes. So that is another major issue there, driving the price up.
Yeah. Okay. Yeah, I totally agree with you on that. Like I said, maybe we can have a financial boomer expert in the future podcast. But so speaking of the generations, 2008 financial crisis,
Mhm.
it was a huge, uh, you know, uh, was it deflation or something like that of the
Deflationary period, yeah.
yeah of economy, and that was a huge impact in the global economy itself, not just the US. So do you think we're entering into something similar like that with our inflation scare, or do you think is there any impact on the real estate market that people should be, worried about in terms of being an investor?
Well, in terms of the real estate market, if you're investing in cash flowing properties, at least in the commercial space, it's probably not going to be that drastically affected. In fact, you're probably better off looking at the overall larger macroeconomic picture in terms of, say, how wage inflation is affected, how costs of living are affected. But in terms of people who are looking to invest in smaller properties, I mean, I personally wouldn't bank on the prices going down.
Okay.
I mean, there certainly is going to be fluctuations, but if you think, but as I mentioned, I think that this is one of those particular inflation areas where it's not going down. It
Would it
might
ever
stable.
go down? Would it ever go down though? Because I also want to get into it.
Well, I mean, I think the price growth will probably taper off, and it's not going to be going up as much. But if I wouldn't bank on it going down. I think
Not
that
anytime soon.
I mean, if there is some form of a crisis, the prices could decrease a little bit, but not so much to really compensate, to really say drive down the prices to what they were 10 years ago. I mean, unless all of a sudden the Federal Reserve decided to abandon all monetary policy and switch over to some form of a gold standard, at which point then you would have quite a hell of a deflationary
So
spiral.
we have to resort to going back to the gold standard now, right?
Why I personally don't like the gold standard. I think that we'd be much better off just actually trying to increase inventory, so that way, yeah, you stabilize the prices of real estate, so you build more, so the prices don't keep going up, and then you make sure there's enough resources to keep building inventory, while at the same time making sure everyone's wages are going up. But my point on that is because historically deflationary periods have been substantially worse, primarily because of this one little quirk of human psychology, where people feel the pain of their asset prices going down much more than they feel it going up, and therefore deflation creates a lot more panic and and results in a lot more people holding back money when it needs to be circulating in the economy in the most. And I know that a lot of people that focus a bit on crypto, they're probably not going to like what I'm saying here, but at the very least, from anecdotal evidence from the last crises over the past 100 years, that seemed to be so far the best mechanism of addressing it.
So, dumb it down for us, because this podcast, I'm trying to cater towards more, beginner investors and, intermediate
Right.
investors. This is what the podcast is all about, because it's based on, our platform and our software that we're building, which is Tribe, which is
Right.
probably the easiest way of, investing, which is investing in yourself, which is human capital. Which I think is the safest. But going off little tangent there, but so dumb it down here and then explain to us what is a gold standard for people like who doesn't really know what gold standard is, like Barney style.
Well, basically, a gold standard is the general idea where the currency that you use in your economy is directly pegged to a certain amount of gold. So say that if you have $1, it could be redeemable for, say, 0.001 ounces, and that amount is fixed. So basically, that means that as much currency you have is directly linked to how much gold you have.
Mhm.
The only problem with that is there is a lot is that if an economy is constantly growing and wealth is constantly being produced, generally speaking, unless you are actively out in the world trying to secure more gold, you're not really increasing your currency supply, which makes the actual money that you have very, very expensive, which makes it harder to put it more towards projects and investment in the economy.
Yeah, I get that. But all right, let's go, because of the time, let's go into our market changes in actual places like the real estate heaven like New York City and Silicon Valley. I just wanted to talk about what kind of impact they had during COVID era. Because of COVID era, a lot of um, not just real estate, but businesses and investment itself in New York City and places like Silicon Valley and LA and all these big city had a huge impact, huge negative impact into it. And I'm wondering if is a good, you know, is it a good impact right now? How is it going with like New York City and their real estate and Silicon Valley, all these big tech companies like moving to Texas and like Florida and stuff like that? Is it impacting at all with those places like that?
Well, specifically, I would treat New York City and somewhere like, say, San Francisco, the Bay Area, as being a little bit of anomalies in their own right.
Mm-hmm.
Namely, that in general, you did see a large movement of a lot of people from just kind of high cost of living areas and high tax states into other states. But on the other hand, and yes, this is affecting a lot of places. However, in terms of New York and San Francisco, or like Manhattan and the Bay Area specifically, at least, I mean, I'm not as familiar as to what's been how San Francisco has rebounded. I know that in New York, a lot of people did leave. Some people did move for other cities. Some to Florida. That was a pretty popular destination. But a lot of people who were moving from New York were just moving across the river to New Jersey,
Okay.
and then still staying within the area. And when you did have those 30% vacancy rates for a lot of apartments, yeah, landlords basically slashed their rent prices, all of which would result in actual value of the property going down. But
So
then
it
you actually,
okay. So it does impact the real estate going down. So
yes,
does it mean it gets cheaper? Because yeah,
it it it
the
it
housing
it
market was so high right now. So
it it, it, it got cheaper, except for the fact that as quickly as that shock happened, and as soon as the 2 and 3 months free rent came in
uh,
and rent prices went down, everyone went right back in.
uh,
So New York is, I honestly wasn't expecting that, but apparently New York still kind of has that appeal.
let's go into our little fun fact of the day. Fun fact on this today's podcast. Did you know that Bill Gates is now the world's biggest farmland owner? So he's been buying a lot of real estate with his billions of dollars. He's one of
Yep.
the richest people in the world. When the what makes me crazy is that richest people in the world, they have no idea what to do with their money. As a financial expert, you probably can see the scale and the size of billionaires. They just have so many leftover cash flow, right? And they just buy up like all these real estate for generations and stuff like that. So fun fact, Bill Gates is
Oh yeah.
now the biggest farm owner. And do you know, I didn't really go in depth into that, but do you know, maybe it's probably for his foundation and probably for his real estate investment. It's a good
Hmm.
strategy to have, but or you have all this money left over. I guess it's a very good strategy to invest in all those lands that we're probably going to need in the future as well.
Hey, look, at that point, once you reach that level of wealth, unless you're looking at just competing for the sake of fun of it, head of the Jeff Bezos, at that point, really all you can do is just focus on just preserving your wealth in any way possible. I mean,
Right, right. And as you said, investment, other than investment in yourself, like Tribe, probably real estate is probably like the safest route to uh like guarantee profit. Statement conclusion, let's talk about, when is a good time as a new investor to get into either Fundrise or applications like ETFs, Robinhood ETFs, and stuff like that? When is a good time for people to save money? When is a good time for people to actually get into real estate in this like inflation scare?
I'm going to give the boring answer when it comes to things such as ETFs and the like. Which, yes, I do still think that just constantly investing in increments in the market is the safest way of doing it. Timing the market historically doesn't go well unless you are flat out one of the people owning a company that is IPOing and you happen to be selling the securities on the private market. But just short of that, your best bet is to simply invest in small increments and grow over time. And in terms of, say, getting into real estate, I think that at any point it is a good time to do so, especially if you're afraid of inflation, particularly if you can lock in, say, like 30-year fixed rate mortgage at a low rate. Because then if inflation goes up, if cost of capital goes up and mortgages go back to, say, 5 or 6%, you have your rate locked in at, say, whatever that 2 or 3%. And if that happens to be lower than inflation, you are functionally getting paid to borrow money.
Yeah. Okay. Sounds good. All right. Well, thank you guys. Thank you, Alex, for joining us on today's podcast. We'll definitely do more talk on inflation scare part 2. Thank you guys for joining. Please follow us on Instagram at TryveOfficial, and please follow us on TikTok at TryveOfficial as well. And, as again, have a great day. Bye-bye.